What Michael Burry just revealed about China. Michael Burry, made famous by 2015 film The Big Short for making $100 million shorting the American housing market ahead of the 2008 financial crash, has declared his unsurprising position on China. In this video, we will discuss what Michael Burry said about China, Chinese debt, and the Evergrande collapse. So watch the video till the end, because today's video is going to be the bomb. Welcome to Michael Burry Secrets, your daily dose of Michael Burry. If you're interested in everything around Burry, this is the place for you. Subscribe if you want to stay updated with all the Michael Burry secrets, predictions, and stay one step ahead in the financial world. Watch the video till the end, and make sure to hit the like button if you want to be a millionaire within the next 3 years. Don't forget to enable all notifications to join our weekly cash giveaway pinned in the comments. Now let's get to our topic. On Twitter, Burry endorsed a financial analyst who claimed that the Chinese markets are becoming a car crash of which the rest of the world could be a victim too. Note the date, Burry tweeted, enclosing a tweet from the 20th of July 2021. This is why, if you want to be informed or be cool, you should read every thread on hashtag Evergrande, China, Contagion, the last few months by @TheLastBearSTA1. In the enclosed Twitter thread, the unnamed analyst explained how the biggest risk to equities is contagion in the Chinese markets. The parallels to US in September 2008 are striking. Critical policy decision relating to saving a failing bank with bad assets over-levered on a property bubble. Unless Beijing steps in with a strong statement to support these firms, the risk of contagion is very real, the analyst warned. Burry's tweet instantly drew attention from Wall Street Bet's Reddit thread. A post simply titled, "Michael Burry confirms China collapse incoming $12 trillion," has been upvoted 1.8 thousand times in just 2 days. The largest Ponzi scheme in human history is about to fold. A $12 trillion credit market based on empty, dilapidated apartment buildings. We all knew this was coming, and if you didn't know, well, now you know, the post reads. 870 comments were left on the post, with the majority praising Burry's insight. Burry has since deleted all of his tweets. With over $300 billion of debt on its books, investors have been expecting Evergrande to declare bankruptcy any day now. Efforts by Evergrande themselves to shun rumors regarding their bankruptcy were only met with increased speculation that the company will collapse. Even the Wall Street Bets community has been weighing in about the future of the troubled Chinese firm. Last week, legions of angered investors stormed Evergrande's headquarters in Shenzhen, demanding the company repay their dues. Meanwhile, on Reddit, a video of billionaire Guo Wengi predicting China Evergrande's collapse from 2017 has been circulating. Evergrande has since extended an olive branch to disgruntled investors, offering them discounted property in lieu of the debt owed. Evergrande is China's second biggest property developer and has huge debts, with around $300 billion of liabilities to banks and bondholders. It warned earlier in September that it could fail to pay its creditors, prompting some investors to panic sell its bonds. On Monday, Dow futures plunged more than 500 points, and Hong Kong's Hang Seng Stock Index tumbled 3.3%, as investors braced for a big week in which Evergrande could default. It has an $83.5 million bond interest payment due Thursday. If it does default, the fallout could hit Chinese suppliers as well as foreign investors, including BlackRock and Allianz. Some have suggested that if Evergrande collapses, it could be China's Lehman Brothers moment, referring to the role played by the demise of the U.S. investment bank in the 2008 financial crisis. Yet many market experts have said that Evergrande is too big to fail and is likely to be rescued by the Chinese government, limiting the economic impact on China and the world. Many analysts say China's government will save the day. Bond market expert Ed Yardeni, president of Yardeni Research, told CNBC he thinks it will act to limit any impact on the financial system. The reality is Evergrande is too big to fail, and I think the Chinese government is going to intervene big time, he said Sunday. It will be restructured, and in a way, that won't harm the economy too much over there, and won't affect the global economy or financial markets the way Lehman did. Hui Shan, chief China economist at Goldman Sachs, said the authorities will not allow a situation where a disorderly default of Evergrande spirals into a crisis, writing in a note Monday. Yet, she said to avoid contagion, it is imperative for the government to provide clear communication and to shore up confidence among homebuyers, suppliers, and contractors, banks, and other non-bank financial institutions. Simon McAdam, senior global economist at Capital Economics, said a managed default or even messy collapse of Evergrande would have little global impact beyond some market turbulence. Even if it were the first of many property developers to go bust in China, we suspect it would take a policy misstep for this to cause a sharp slowdown in its economy, he said. But McAdam added, given how bloated China's property developers are, there could be a whole wave of defaults around the corner, which would have the potential to kickstart a hard landing. Markets should brace for some big pumps along the way. Some others think Beijing won't be able to keep a grip on things. Shane Oliver, chief economist at Australian bank AMP Capital, said Evergrande's size makes it highly dangerous. He expects Beijing to step in, but said there could be a few big bumps along the way. At about 6.5% of total Chinese property sector debt, its collapse and liquidation could have a systemic impact like that of Lehman Brothers in 2008, in terms of a flow onto the Chinese property and financial sectors and its economy. Also concerned is legendary investor George Soros, founder of Soros Fund Management. He said in a Financial Times piece that it is over-indebted and in danger of default. This could cause a crash. Famed investor Michael Burry of Big Short fame endorsed a Twitter thread by a financial analyst saying that Contagion is already at work in Chinese markets and could soon spill abroad. There are significant losses already for the international holders of Chinese credit and equities, the analyst wrote. Uncertainty and volatility will remain elevated. The tweeter, Girolamo Pandolfi, cites China-based Evergrande, whose primary business is real estate development, saying that credit is collapsing. As a result, it will affect industries across different sectors, from steel manufacturers to those that mine the iron ore. According to CNBC, Evergrande is now snowed under a crushing debt of $300 billion. The company, described as the world's most indebted property developer, has struggled to pay its suppliers and has warned investors it may default on its debts. Mark Williams, the chief Asia economist at Capital Economics, says Evergrande's collapse would be the biggest test that China's financial system has faced in years. Dan Wang, an economist at Hong Seng Bank, said Evergrande is such an important real estate developer, and it would be a strong signal if anything happened to it. I believe there will be some supporting measures from the central government, or even the central bank, trying to bail out Evergrande. Burry tweeted at the Federal Reserve, "So are you lying to us, or are you lying to us?" Well, that's it for today's video, guys. Also, we would like to mention that this is not a channel intended specifically to provide financial advice, and we do not ask you to invest in any company. This is merely a channel directed towards bringing educational content to your doorsteps. With that in mind, before you invest in anything, we recommend you do thorough, wide-spectrum research on the topic. And make sure to subscribe and give us a thumbs up. See you next time on Michael Burry Secrets. Bye.